Anish, good having you. Thanks so much for joining in. This is Neeraj here. Good morning. What's the approach been, Anish? 2018, contrary to what a lot of people believed, and actually in sync with what a lot of people believe would be volatile and has been volatile. But the complaints would be less now that we are trading at new highs. What's the message that you are giving out to your institutional clients?
No, I think while one might say that one is trading at new highs, but if you look at a lot of stocks, they are still down 20-30% from their highs. So you have a sentimental, you have a factual high, but a sentimental somewhere mid to low. A few stocks have done extremely well, and the whole market kind of has gravitated towards that. So it's a fact, and that is what has been happening. So that's why you are seeing a lot of frenzy to the market. Also, to an extent, there has been a slowdown in the selling of the foreign institutional investors. While there is some slower inflow on the local mutual funds, but given that there is a huge slowdown in the FII selling, the market is getting propped up. So overall, also the results have been pretty decent, especially in the consumption stories. Results have been particularly fantastic. So this quarter has been good in a way, and that has lent a lot of support to the market as well.
Anish, good morning. Devina here. Like you rightly pointed out, the FIIs have not been very instrumental in leading this rally on the index. What do you think is keeping them out at this point? And India has got all the right ticks in terms of investments right now and what returns we are providing. So what is keeping them out, and when do you think that this tide will turn?
So what we see is that the FIs were fairly overweight in the Indian context, and they have reduced their overweight position, either reduced their overweight position or have gone neutral, given that the valuations of Indian markets have been pretty much at a premium to the other markets. My sense is that with continued growth which we are seeing, probably we'll see them come back into this market. At this point of time, what I can see is at least they have slowed down considerably, or some of the funds have started reversing their position into buy positions. So if the earnings momentum continues, which it looks like that the economy is on an upswing, and given that the elections are around the corner, government spending is on the rise. So we are going to see improved demand and therefore improved earnings scenario as we go forward.
Anish, so far with the earnings season almost coming to conclude, what's your sense of how the earnings season has panned out, and any specific sectors that have really shown and pain points?
Yeah, so pharma remains to be a pain point. There had been an expectation that they might do a little better, but given the fact that the results have been so far subdued or lower than expectations, and the surprises on the US sales continue, there has been a disappointment in pharma. However, sharp improvement in the consumption stories has come about, be it in the staples, be it in the discretionary side of the business. So to that extent, that story is doing pretty well. I think even the commodities have started to perk up after the sell-off which we have seen over the last 6 months, given that there was uncertainty on the trade wars, etc. But we have seen commodities deliver good results. And also the trend looks to be a little bit more positive now than negative. Automobiles has been a mixed trend, and cement also has been a mixed trend, though most of them have kind of outperformed what the expectations were.
Are you a believer in the continued uptick in the consumption story, and in light of that, valuations can be sidetracked considering at what multiples the likes of ITC, HUL and all are trading? So you can probably set them aside if you believe that the consumption story still holds.
That's true. That's true. So I think, and more credence to the consumption story because you have had a series of things. One is the pay commission. Second is the government spending on the rural side has been continuously increasing. The farm loan waivers across various states, and plus now the new MSP, thing which has come about is all pointing out towards an improved consumption or continuing good consumption stories. The second thing which has happened, which not a lot of people have focused on, is that in the earlier part, about 2 to 3 years ago, the rural spending was concentrated in a few areas. Now, over the last 2 to 3 years, the focus has been more widespread. The Bimaru states which were not getting earlier a good share of this social spending or rural spending, are now getting an improved share, and as a result, there the population in these states is higher than the rest of the country. So what we are seeing, therefore, is a more spread out of the money which is getting spent in the rural and the social sectors. That is kind of giving a fillip to the consumption stories, and that I think should continue as through the election year up to 2019.
Okay, ICICI Bank, SBI, Axis are amongst the stocks that are active in today's session. Anish Damania, the last 20 days, we've seen a bit of a change. The corporate-facing banks are seeing interest, maybe not at the expense of the retail-focused banks, but the likes of Kotak and the HDFC banks have been largely sideways. Where are you bullish? Where are you more bullish on?
So we continue to be bullish on the retail banks. I think what has happened is that the corporate banks got sold off and had underperformed very significantly. So if you look at till about 15 days ago, ICICI Bank had underperformed by about 17 to 18%. I think there was a case where that sharp underperformance could be reversed. It's not that they are out of the woods or they're going to have significantly higher ROEs going forward. It's just that the valuations had fallen quite a lot, and probably what you're going to see over the next few quarters is significantly lower slippages than what we have seen so far. And also the fact that some resolutions are coming through in those big accounts, we are going to see some respite on that. So as a result, there is this perk up in the corporate sector, corporate banks, and that's what we are seeing. So probably it was a trade that has played out, and now I think focus will shift once again to how sustainable the return generation will be for these corporate banks.
Okay. Anish, before we wrap up, just one quick thought on the IT companies. Rupee notwithstanding, the quarters thus far have been largely decent. TCS and HCL Tech commentary looking good too. Mid-sized companies speaking well. Are you bullish? Are you bearish? Are you neutral?
Yeah, so so with some of the names we are bullish. So the two bellwether names, TCS and Infosys, we are fairly bullish on those. So if you look at the IT pack over the last 2 quarters, they have been kind of beating or meeting estimates versus a few quarters earlier where they were consistently underperforming the estimates. The American business and the BFSI business both have been on an uptick for the last 2 quarters, with this quarter especially showing a lot of strength. In terms of order wins, we are seeing significant improvement in the order wins in the BFSI segment, which contributes a very large chunk to the overall sales pie. So as a result, we are seeing continued momentum into IT, and we are seeing them beating the estimates. So the earnings growth story, which was about 7 to 8% last year, has shifted to 9 to 11% into this year, and probably as indications are there, it could be a little stronger than what most market expects. So I think IT will continue to outperform the markets.